Good afternoon, everyone. So, welcome all of you to the Budget Discussion Forum by Softlogic Stockbrokers. So, today we'll be looking into what the budget says about how the government would be implementing those proposals. So, we'll be giving you all a quick outlook of it. And also, we'll be having a good panel discussion where we'll be talking about the impact of the budget on our stock market. And once the session is over, you are mostly welcome to put in our questions, whether they can be your doubts, so you all can get them clarified. We are more than happy to answer. So without further delay, let me move towards our presentation. So hope my screen is visible to everyone.
Yes, Natasha.
So let me start off by giving you all a quick outlook on what the budget is. From a statistics point of view, so the government is expecting that the revenue for the next year would be at around 4.1 trillions, that is with a compound annual growth rate of 43%. And also for the same period, the government's expenditure would also increase up to 6.98 trillions. That is also with a compound annual growth rate of around 25%. So as we know that this expenditure is higher than the revenue, that would result in a budget deficit in the next year as well. So when we compare with the current deficit, it is a further expansion. So now let's look into the composition of the government's revenue and expenditure both. So you can see in the first pie chart, the government's revenue is mainly coming from the taxes on domestic goods and services. You can see a good 53% of it, that amounts to around 2.2 trillion out of the total revenue. So you know that there has been a VAT announcement as well, that the VAT would get increased up to 18%. So that is also factored in here. That is why it shows a larger proportion. And also when you look into the government expenditure composition, you can see that 34% of the government's expenditure is from the interest for the interest payments, and also 16% is for the principal payments. So overall, it amounts to around 50% of the expenditure is attributed to the repayments. So now let's look at how the government's revenue and expenditure both have fluctuated around during the past 10 years. If we look in from 2012 up to now, we can see like upward and downward trends consequently. And if we look into last year, that is 2022, we can see that the revenue has been kind of flat as a percentage of the GDP, and the expenditure has slightly come down. But in this year as well as in the coming year, both of the revenue and expenditure would increase. So now talking about the expenditure improvement, this is actually essential as of now, because as a country, our economy to get, recovered, this expenditure is a must. Because you see, with this budget for next year, the government has so many plans to give safety nets. So it is essential for our people. These subsidies are really essential. So that's why the expenditure is high as a percentage of GDP. So going forward, it would, kindly slow down. But when looking into the revenue aspect, this improvement would continue to be there in the coming years as well. So that's what we expect. And also there was a proposal regarding this tax identification number. So this is becoming a key unit. Whereas if you want to, start off several business activities, as I've mentioned here, you need to have a tax identification number. And why the government has proposed this is that they want to streamline all these activities. And that is in order to, avoid any tax evasions. So now we are coming into the heart of our discussion, that is the impact of the budget towards our stock market. Okay, so here we have, identified several industries that are in line with the proposals that have been announced. So let's look into the impacts. First, when we look at the construction sector, we heard that the government is planning to, give these companies some lands to construct their buildings on. And also that is kind of positive news for the sector. And also related to the tourism. So the government is planning to develop so many local tourism areas, even though this is not directly impacting the listed companies. However, this local development is an indirect effect on the tourism related companies. And also under the banking sector, there would be a recapitalization plan happening for the state banks. So we'll talk about this going forward. And also alcohol and tobacco sector. So there will be some favorable policies coming in, but on the converse side, there would be high excise charges. And under the agricultural sector, we heard that there are so many allocations of subsidies by the government. And even they're planning to expand the dairy production in Sri Lanka. We'll be talking about this in detail as well. And healthcare sector, there will be 180 billion allocation for the healthcare sector. And even under renewable energy, there are talks going on that there would be a lifting of large barriers related to this sector. And also the government proposed that there will be many free trade agreements. So this will be impacting the apparels and materials in an indirect method. So going forward, these are the sectors that would get impacted through the proposals. Apart from that, there are some other general proposals as well. So we heard that this VAT thing is the most significant that people are most focused on. So the VAT would get increased to 18%. However, to negate that adversity, the government has plans to increase the salary levels of the people as well. So talking about VAT, actually we know we cannot actually specify that these are the industries that would be getting impacted through this VAT hike, because this would affect all the companies, the whole corporate sector. So if you look into the cost aspect, obviously there would be no burden for the companies itself, because anyway this burden would get passed on to the end consumers. So what would the companies be struggling is from the demand pressure that would come in. And also we know that there have been so many industries that were exempted from VAT before, and it is likely that most of the industries that are mentioned here would get liable for VAT going forward, but we cannot specifically mention since we have not yet received a formal gazette. Yeah, so if you look into the IMF targets and our budget for the next year, the budget is quite in line with our IMF's targets. So we'll talk about this as well in detail going through our panel discussion. So without further delay, let me move towards our panel discussion. So for that, we have our co-heads of research, Renal Vikramaratne and Shadini Silva. So they are ready to go through the panel discussion. So let me start off by asking my first question. So as I mentioned earlier also, the main focus point has been on VAT. So we know that this VAT revision has been in line with the IMF requirements. How would the market react to this? Renal, would you like to take over that question?
Thanks, Natashi. So yes, so when we look at how VAT would impact the market, the first thing we need to understand is VAT has also had a bit of a soft launch coming into the budget. By August 25th, we saw a basic bill being circulated in Parliament. And then later on, we also saw cabinet approval coming a month later for the VAT rate to increase another 3% as well. So when you're looking at the market impact, there already has been a good amount of time for the market to process this, and that is something we believe would need to be considered. So when you look at most of the counters that currently would trade, most of them typically, as it is, pass on the impact of VAT to their clients. And this is something that is most likely going to continue even with this 3% increase. Now, the consumption sector, which is going to be the main sector affected by VAT, is a sector that we're actually looking at to make a strong recovery into 2024. This is also coming as remittances improve, as tourism improves, earnings from these segments also start to improve, and overall we see that economic recovery. So with all of those coming, typically it would be the consumption sector that recovers the fastest, and that is also the sector that the government is currently looking to tax. So that is something to watch out for. But what we need to understand is, given that this is a sector that we see the strongest recovery coming through, VAT, while it's being negative, is not necessarily going to transfer any of these counters down from a buy rating from what we already have at the moment. So yeah, Natasha, that is the basic overview in terms of VAT.
Okay, thanks, Renal. So my second question is, it was announced that one should have a tax identification number in order to be eligible for several business activities. So how would the people react to this, and what would be the outcome? Shadini?
Well, thank you, Natashi, and good afternoon, everyone. Thank you for joining in with us in our budget discussion. So yes, Natashi, this whole new concept of tax identification number or the TIN number is actually what we feel is a very good initiative brought by the government this time, because this is something that Sri Lanka had been lacking over the past years. Because look, as a country, we need to streamline our revenue avenues. We are given targets by IMF. We are to achieve certain revenue targets over the next what can I say, next 3 to 5 years. So there's like a long way for the country to go, and we need to streamline how we get our revenue in place. So by this identification number, I think a lot of tax evasion could be avoided, and plus the government will be able to track from where the revenue is actually accumulated, from where the revenue is generated. To because now we hear that this TIN number is required to be submitted whenever you're going to open up a current account in a bank, or it could be a development plan. It could be any sort of a development to pass on a plan. This needs to be submitted. And in the event that you're going to invest in any sort of assets, it could be property, it could be vehicles. In the registration processes, these numbers need to be submitted. So what we feel is this is a very, very timely measure, and a prudent tax collection is what is intended to be generated by these sort of proposals. So what we believe is government to sort of implement these sort of novel concepts as soon as possible once the platform is all set, because sooner the better these sort of proposals, which would be a big benefit for the eternity of the taxpayers in this country.
So I hope Shadini, a quick thing.
Your question.
So ultimately what that would mean is that you should be a taxpayer to get into these activities.
So Natashi, so this is basically going to be like an identification where each and every adult above 18 years. So this was actually proposed by the previous budget as well, that everyone over 18 years it's mandatory to open up their tax files with the government. So opening up a tax file does not mean that you're earning wealth, or you're this is your occupation, but it is just sort of an identification that you are going to be a registered taxpayer in this country holding a tax file. So this unique identity will allow the government to track once these individuals move into different earnings generating stream. So it could be your occupation, it could be your own business. So the way of generating wealth could be easily monitored then by just providing this sort of an identification number to all our citizens going forward. So that is the whole norm behind giving this TIN number.
Okay, thanks, Shadini. So my next question is, The budget clearly mentioned a recapitalization plan for the state banks in order to cushion the impact coming in from the external debt restructuring. So, what are your comments on this, Shadini?
Yes, Natasha. So a good question again. So actually, this is also another good proposal that the government has brought in this time from the budget, because we know the state banks are they had been the leading lenders to the government over the past years, and they are currently in the process, or rather, they've been giving a lot of concessionary loans and moratoriums to what not to the hardly hit segments in the country over the past years, because we know Sri Lanka had been experiencing back to back black swan events over the past few years. It could be COVID, it could be then the economic crisis that we came across during last year, 2022. So yeah, so the state banks had been proactively providing for these sort of situations, so that the country come out of this in a smoother manner. And on top of that, we know there's an impending external debt restructuring plan that is currently in the negotiation stage. So we know that all these state banks have a quite amount of exposure in the external front as well. So we are quite sure that these banks would have provided over the past few quarters to tackle this event. But given that there are other things that are surrounded by surrounded in these sort of circumstances, I think the banks need to have adequate capital buffers in order to navigate these sort of challenges. So a 450 billion worth of funds to uh, to their capital buffers will definitely strengthen their capital position. So this will not actually you should actually look at this that it's going to only benefit the state banks per se, because state banks having a stable growth would definitely trickle down to the private sector financial arm as well. So definitely this is going to be a very good initiative. The state banks having some sort of a breathing space in term, in turn, there's going to be a deeper haircut than expected. And also, this would eventually stabilize the domestic private sector banking and NBFI sectors as well. So eventually the listed entities in Colombo Stock Exchange, the banking and finance would also have some sort of stability with this new proposal that the government has brought in this time by the budget. And since we touched on the banking side, I would like to slightly mention about the other proposal which was brought about by the government, which was to divest or rather issue 20% ownership stake to the ownership stake to uh, it could be an private investor, or it could be to the public of the top two state banks. So this is basically the government is talking about People's Bank as well as Bank of Ceylon. So this is also one good initiative. So how should we look at it is now in the event that government cannot find one strategic investor to divest this entire of 20% stake of these two banks, might as well this could happen via the Colombo Stock Exchange. So this is actually a very good thing if it gets through, because this would certainly improve the liquidity position of our market, and also it would be a way to attract far more investments towards Colombo Stock Exchange. It could be from the local front as well as it could be from the foreign investor front as well. And also we hear that President intends to sort of divest further stake subsequently. It could be another maybe a 10 to 20% stake subsequently to this 20% initial stake divestment, again to the deposit holders of the banks as well as to the employees of the bank. So I think all these initiatives or other proposals could be classified as very good initiatives taken by this government, because we are currently struggling to get out of an economic crisis where Sri Lanka fell deep down, and currently we are actually finding our way out. So we need to bring out these loss-making or other struggling entities owned by the state into a profitable situation. So we know there are other entities like Lanka Hospitals and Sri Lanka Telecom, the Hotels Corporation. All of these entities are currently, in this whole list of, who has been, who in the list of getting to be privatized. So good initiatives by the government and especially the two state banks, 20% stake divestment. So hopefully these things, will get enacted in the near term. So we are also watching closely as to the timelines the government is setting to execute these sort of lucrative proposals.
Okay, thanks, Shadini, for that good explanation on that question. So, I have another question for you. So, there were many proposals related to the construction sector. How would the impact be on the relative stocks? Overall, we know that it's positive. Would you like to elaborate on this?
Yes, Natasha. So, as banking sector, construction sector has also it's one of these sectors who had also had this hard time. They were also heavily beaten by all these events that happened during the past couple of years in Sri Lanka and also across the globe, and especially the economic crisis had sort of a deeper impact on construction sector as well. So let me explain why. So construction is one of these core areas where every economy should prioritize on. When you prioritize your expenditure, you really need to allocate a tangible chunk on development of construction, infrastructure development, and so forth. But what happened was, given that Sri Lanka was struggling with an economic crisis, construction was majority of the construction sector projects were at a standstill, given that government did not have adequate funding to allocate for these projects. Or even like once Sri Lanka declared that Sri Lanka is currently entering a temporary suspension of their debt repayments, several donor countries who already had projects, funding lines in place for large scale construction projects, actually based on their laws had to withdraw from providing funding for our infrastructure development projects. So such projects, if I were to mention some of the projects, the Central Expressway, the phases, there are there are more than two phases which are currently, which is not finalized in terms of funding, and the airport terminal expansion project, the second phase of this project is currently at a standstill because the funding from Japan is currently stopped. So likewise, there are many large-scale projects. But once Sri Lanka gets out of this whole debt restructuring process, as in when we see a limelight from the external front, and which would eventually lead to a rating revision, an upward rating revision, we would definitely see funding lines again channeled back towards Sri Lanka for infrastructure. So yes, there were some allocations from this time's budget as well, but there are brighter horizons for this sector because a long way to go. The segment was stagnant over the past years, so a lot of potential in the listed entities as well. So a very good segment to keep an eye on is what we believe. Yes,
Okay, thanks,
Natasha, I
Shadini.
hope I answered.
Yeah, you answered it well. So, the other question is, when talking about tourism, there were many proposals to uplift, as I said, the state owned tourist areas. How would this affect the listed hotels?
Yes, Natasha. So tourism is now identified as a low-hanging fruit. Actually, this fruit is like there's so much potential in this segment as well, because tourism earnings once used to be like the among the top two earning forex generators for Sri Lanka. 2018 was a very significant year for tourism, where Sri Lanka marked its highest tourism arrivals. So we touched 2.3 million arrivals, if I'm not mistaken, and earned more than about good $5 billion of income during that year. So this we need to replicate over the coming years, because that is a avenue where Sri Lanka can earn quite a lot if it's properly focused on. And if it's very good to hear that the government consecutively, in the consecutive budgets we've been hearing, government is planning to sort of focus to develop tourism. And now that we have seen in this budget as well several proposals being put out to develop the state-owned tourism sector entities, so definitely attracting more tourists to the country. Maybe now we've already crossed the 1.1 million arrivals mark. Hopefully, 1.3 is an optimistic target for 2023. And eventually, in the next 2 to 3 years, maybe we reach 4 to 5 million of arrivals. Definitely, our earnings from tourism is going to be fantastic. So, this in turn would directly be beneficial for all the listed tourism sector counters. So, it could be business travel, it could be via resorts, a lot of potential for these counters to improve on their earnings, because as of now we know this segment is currently struggling hard to come out of that losses that they've been incurring. They're trying to find their break-even points. And also some of the hotels, if we look at our listed stocks, some of the hotels have started to report good results. So a potential segment where our investors to keep an eye on. There are no specific picks who have solid fundamentals amongst the lot. So yes, Natasha, another good segment who has great potential to move forward and come out, as a very come out strong over the next couple of years is what we believe. So another segment to keep an eye on for all our investors.
Yeah, so specifically, even the coming quarter would be a good quarter for the tourism sector with the seasonal effect coming in, no?
Definitely, Natasha. So the winter tourism is going to happen over the next few quarters, and we are hearing from industry channels that there are encouraging bookings, forward bookings for these uh, the next few months as well. So this is going to be an encouraging period for the whole of tourism sector. So let's hope that the segment come out of the whole loss-making environment, and they report good results over the next few years is what we have to think of.
Thanks, Shadini. So my next question is for you, Renal. So in terms of alcohol and tobacco, seems like the proposals are in favor of this segment to increase their volume capacities. However, the excise duty charges are likely to be a burden. Overall, do you think that the positive proposals would negate this adverse side of it?
Thanks, Natasha. So that's actually a very good observation. And yes, definitely we feel that the positive news here far outweighs any negativity that can come to this sector. The key reason that we believe that is when you look at how licensing works in the alcohol and tobacco sector, typically the entire process of getting a bar license or getting a sale and distribution license for hard liquor or soft liquor tends to be it's almost like a mafia actually. So it's quite difficult for people to get new licenses, and even so you have limits for the number of licenses you can have within a certain area. And so typically people don't opt for this unless you're already a part of the trade or unless you have contacts that can help get you a few steps ahead. Now, with the regulation of this and conversion to online licenses, that actually opens it up a lot more, and that could help expand distribution to areas that typically have been a bit more dry. Now, when you consider the alcohol and tobacco sector, typically you also have a very large informal market or rather an illicit market. And when you have things like these licenses being issued more freely, when you even have some of the institutions registered with the Sri Lanka Tourism Development Authority getting licenses, then you can improve the legal liquor market in the country. Besides that, we've also seen regulations coming regarding regulating BD, and that too is going to help, especially in the tobacco side of things, in reducing the illicit products. Another key thing is having flexible opening hours. So at the moment, that too remains a concern. This is especially when you're looking at also the blue collar segment, where you have people piling up at the last minute just before bars close, lining up to buy alcohol. Now, if this limit is extended even further, and if it's a lot more flexible, that too can lead to higher sales. Now, yes, there is proposed to have an increase in admin fees and excise department for fees, but despite of this, typically these fees tend to be passed down to the consumer. And when it comes to the alcohol industry, you would see two regular price revisions happening during the course of the year. First is in January and then next in July. So even if these fees do come into the picture, you're likely to see during one of these price revisions, these being passed down to the consumer. And overall, again, like what we were mentioning about even the consumer sector, which translates over to the food and beverage sector as well, you are going to see a recovery over the next couple of years. And these sectors would definitely continue to do well. And that is what our outlook is for this sector.
Yeah, so we are expecting kind of a consumer shifting towards the legal liquor from illicit liquor, right?
Correct. Absolutely, Natashi. So now with the times being more flexible, with possibly no more stores coming in, you would be reducing these dry areas and you would be able to get free access, the access to legal liquor is going to improve. So that is definitely going to benefit the industry.
Thanks, Rena. So I have another question. So there were a lot of subsidies related to the agricultural sector. However, the allocations are low when compared with 2023. So therefore, how would the next year perform compared to this?
Yeah. So two things that we need to understand. First is when you're looking at it from an overall budget perspective, this time the government had to be very clear as to what it allocated different amounts of funding for, because you had to have social and safety nets as well, but you had to be very careful with your expenditure. Now, the fertilizer subsidy allocation has reduced, but when you look at the fertilizer subsidy requirement, now, if you look at 2020, 2021, during those 2 years, you had no fertilizer being allowed in the market. So you had to use organic fertilizer. And when you look at the industry, it significantly struggled during those times. Now, to come out of that struggle, there had to be an additional allowance given to the agriculture sector. So last year, you had the fertilizer subsidy almost double of what it is this time. But that was required for farmers to recover from the low yields that they were facing. But now, if you look at what yields are like, yields have significantly improved. And so now farmers themselves are able to afford fertilizer much more. And when you look at fertilizer prices, if you look at the price of a bag of urea, 50 kilo bag of urea, it has come down from 35 to 40,000, right, all the way down to about 10 to 15,000. So there has been a significant reduction in the prices as well. So now the allocation that you need to have as the subsidy is also significantly less compared to what it was before. So in terms of how this would impact farmers on a real basis, they would still have an ample amount of fertilizer in terms of quantity, and this subsidy would definitely make it more affordable. So we definitely view this as a positive note, even though the actual allocation has come down. Furthermore, when you're looking at it from the perspective of most of the plantations too have seen the impact of the currency depreciation. So now the rates that they get in LKR terms is significantly higher than what it was a few years ago. So they continue to have a bit of positive momentum. The only concern for this sector, mainly the plantation sector, is how they would have to adjust wages, because on a realistic basis, the cost of living has gone up, and that is something they would have to account for. So that is something that they would need to consider going forward. But aside from that, for the agriculture sector, we do maintain a positive outlook as well.
Okay, Rena, would you like to touch on the dairy expansion as well? Because it's becoming a hot topic these days.
Yes, absolutely, Natasha. So when you look at dairy, so at the moment, the dairy production in Sri Lanka does not adequately cover the national requirement, and there have been multiple steps being taken in order to improve this. The most recent discussion that we've seen, especially on that is market related, is the JV that is in discussion between Cargills and Amul. And when the president discussed about his budget as well, in subsequent forums, what he mentioned was that this was also a consideration in terms of some of the targets mentioned in the budget as well, because they significantly want to see an expansion coming in when it comes to dairy production. So there are plans in the pipeline for additional cows to be brought down, and then in terms of the rate of milk per cow is also supposed to increase quite significantly as the entire industry improves and it becomes a bit more efficient. So that is one thing that we see when it comes to dairy. And if this actually does improve, then the amount that we need to import also for this segment starts to decline. So that is a beneficial aspect both for the dairy sector and also on a forex perspective.
Thanks, Renal. So my next question is, so the allocations for the healthcare sector also seems effective. Would the companies in that sector be some emerging counters to watch out for? Shadini, would you like to answer?
Yes, Natasha. Yes. So from this budget, we saw, as usual, healthcare is also one of these very crucial areas in any economy. So this time also we saw an allocation close to about 180 billion being allocated for the segment. So what we need to understand here is, yes, healthcare. So there's a lot of local players who are supplying to the government, the state sector hospitals, to all the state-owned entities. But what we need to understand here is it's a very, very competitive industry, mind you. So there's a lot of competition from the regional peers to supply these sort of goods to the government. So in the event that government decides to, proceed with the buybacks with the local players, local entities like, there are renowned entities in the Colombo Stock Exchange as well. We know for a fact, some companies are doing their own manufacturing facilities. So these sort of companies would definitely have an upper hand in the event that government decides to, select the local players on top of the international players. So we are yet to see clarity as to, what sort of a avenue government is going to take. But yes, there is a whole lot of potential for the healthcare sector related players as well, given, there's a tangible allocation being allocated for the segment. It could be for purchase of equipments, or it could be for molecules as well. So we are yet to see how this works.
Okay, thanks, Shadini. So the other question is the renewable energy sector. So that would also get favored with the proposal to lift any such legal barriers in the sector. So along with emerging demand as well for this sector and the proposals, would those related counters be attractive going forward? Renal?
Thanks, Natasha. So looking at renewable energy, definitely we've had some very interesting developments down these lines as well. The most recent developments has been discussions with Indian parties in order to set up offshore wind power projects and other such renewable energy projects. Now, this is interesting for a couple of reasons. First is if you look at Sri Lanka and India, I think over the past 10 to 15 years, there has been a discussion about an energy pipeline going from Sri Lanka to India, so to buy and sell energy during peak and off-peak hours. But this has never taken off the ground, and this has always been typically at a discussion stage. However, recently we have seen some very interesting progress on this, and it seems that this is coming close to its end stages in terms of negotiation. Now, with this coming in, Sri Lanka offers a very unique proposition to India because, especially when you look at Sri Lanka's renewable energy sector, most of the hydro energy locations have already been taken up. But most of the wind power locations have actually not been taken up. And when you compare that with India, some of the power generation zones, especially for wind in Sri Lanka, tend to have almost a yield that is more than double of what you would get in similar positions around the South Indian belt. So for them to come to Sri Lanka, invest, and even export that energy back to India is a proposition that makes a lot of sense. And that is why you see these Indian groups showing interest to come in. Now, when you look at what this means for the local energy players, if as a country we get used to this concept of producing to export energy, suddenly that opens it up to all the local players as well. Now, currently, the local players have not been able to expand beyond a certain point within Sri Lanka. And what they have done is they have looked into countries like, they've looked into the African region, they've looked into countries like Pakistan and other countries to actually expand their footprint. If this actually comes to Sri Lanka, if you are able to lift some of the legal barriers as well, these companies would be able to increase their presence within Sri Lanka itself. So we definitely see this as an extremely positive sign for the industry as a whole. And when you're looking at the medium to long-term outlook, it would definitely be positive for the renewable energy space.
So the most important thing mentioned here is about rooftop solar, is it?
Correct. So when it comes to rooftop solar as well, this is currently something that has been relatively untouched in Sri Lanka. A couple of years ago, the ADB also had a grant to significantly improve rooftop solar projects in Sri Lanka. But however, this did not practically get implemented either. Now there is a good possibility that is another thing that we would be tapping into, and that would benefit all the players that are involved in that process. So for rooftop solar, typically you have a requirement for aluminium frames, you have a requirement for cables that can handle solar, and you have a requirement for the panels themselves. So this would benefit each player down the line that provides those services.
Okay, thanks, Renal. So the president also mentioned about free trade agreements. From a cost aspect, this is beneficial for the importers, but we would like to also know about the impact on export counters as well. Shadini, would you like to answer that?
Yes, Natasha. So, free trade agreements. So, just let me explain the whole concept behind this. So, uh, we get into terms and conditions with another country, or it could be multiple countries. So that trade both ways is beneficial. So you trade, you export or you import goods from that particular country or export goods to that particular country. Um, Via these sort of free trade agreements, it becomes more and more, our goods and services becomes more and more competitive and affordable. So having more and more free trade agreements actually is one sign that Sri Lanka can sort of improve on the export earnings, because at the moment, if we look at our exports, we exports is one area that Sri Lanka need to prioritize on. Still, the country is struggling. We are in twin deficits. We are still in a fiscal deficit plus a trade deficit as well. So we need to bridge that gap as much as possible in order to sort of improve on our earnings, the forex earnings. So once these sort of free trade agreements are built or rather arranged with, definitely the exporters, if I were to touch on export perspective, the exporters would definitely be much more competitive to export different goods and services to that aforesaid country where they are coming, going and having this arrangement. Plus, if you're planning to get raw materials imported from a particular country where which you're going to set up this free trade agreement with, so these raw materials which are planning to get down from would also be less expensive compared to whilst not having a free trade agreement. So basically wiping off the tax components, which used to be before, but now after the agreements are being discussed, will not be there going forward, would definitely make our products with, very, very competitive when you compare with the other um, other countries who would sort of export these goods or rather import these goods. So definitely on a exporter's perspective, it's going to be very advantageous. They can, uh, gain more profitability via these free trade agreements. And from an importer's perspective, if there are less local producers who supply these sort of goods and services, definitely the priority would be given to import. And if the tax barriers are being taken off via these free trade agreements, definitely it's going to be a whole relaxation of costs for the importers as well, so that their cost of production would sort of come down, and they could make better margins on their production. So yes, it's another good initiative. Anyways, government over the past consecutive budgets as well is trying their level best to build these sort of free trade agreements with different countries. Singapore, India, Bangladesh are some of these countries where government tried, or rather government is currently planning to build agreements with. So definitely another good initiative by the government, and hope these agreements continue for a longer period so that most of our exporters and importers can get the maximum benefit out of them.
Thanks, Shadini. So, Renal, would you like to give a quick analysis on so far how the progression of the budget has been when compared with the IMF targets?
Yes, Natashi. So when you look at the IMF targets, Sri Lanka has been broadly in line with most of its commitments. Now, one of the most important aspects to identify when you're looking at what the IMF targets are is that the budget is just one aspect of the targets. There are also a whole lot of legal targets that need to be brought in. By this, what I mean is new legislature for how governance would take place. An example of this would be the Central Banking Act and the Monetary Law Act. On top of that, you would have lots of other things that also need to come in to ensure that our systems are functioning smoothly. Now, in this regard, that is also where you have something like, for example, the tax identification number, which makes it easier to enforce some of the tax evasion that you see. So when you look at it from that perspective, when you look at the non-budget aspects of the IMF target, Sri Lanka definitely has been on line with a good majority of it. And when it comes to certain budget proposals, what we see is that there are certain numbers that are there for the IMF as well. A good example of this is when you look at the primary account surplus. This is almost exactly on point with what the IMF targets are. And they have specifically mentioned recapitalization separately. Now, this is important because when you look at what the IMF targets were, they also mentioned that the entire banking sector would need to see a recapitalization that comes through, which would be about 6% of GDP. Now, at the time, what we mentioned and what we still stand by is that this is something extremely steep, and you might not be getting it to that extent. But however, on a slightly smaller down scale, that's where we see this 450 billion allocation coming in as well. Furthermore, if you're looking at also infusions for a equity stake, this too can bring in additional infusions to the banking sector. And going on from that, that is why you see this taken separately, even when you're considering some of the numbers. That being said, a couple of key points that we see that is not in line with the IMF targets is specifically the expenditure aspect. Now, expenditure definitely has been more, but again, this has to be taken in perspective because social safety nets are also a major focus of the IMF. So this is something that has to be balanced. And the one key risk that we would see in this is that typically when you look at expenditure and income proposals always tend to be less than the budget, and expenditure proposals always tend to be slightly over the budget. if that difference tends to increase more than what we have seen in the numbers, that may be actually a concerning factor for the IMF. But aside from that, what we see is most of these things are in line, and it puts on us on track for further IMF disbursements and discussions with regard to the restructuring as well.
Okay, Rana. So thanks for that good explanation on the IMF targets. So that comes to the end of our panel discussion. So that was quite comprehensive. Now the forum is open for our audience to drop in their questions. Yeah, we already have some questions. So the first one is brought down interest rates sustainable in future?
Yeah, so when you look at bringing down interest rates, at the moment is a double, has a couple of sides to it. First is bringing it down is something that we need in order to see a certain degree of economic growth. And that is something that would be a key focus of the government as well. Now, looking at whether it's sustainable brings us to one key question, and that is the budget deficit. Now, typically, when you look at the IMF agreement and the IMF tranches coming in, those can be used as budget support as well. But aside from that, we would definitely need to see how the government plans to tackle this deficit. Because if they start borrowing from the open market, then we would likely see interest rates going up as well. But what we believe is for the next at least 3 to 6 months or possibly even 9 months, you would continuously see interest rates coming down at the moment.
Okay, thanks, Renal. So there's another question. Any comments about the impact on the IT industry? So we didn't talk about this. Any comments?
Yes, so when it comes to the IT industry, there are a couple of key aspects. The first major thing when it comes to the IT industry is there has been a lack of talent that you see in Sri Lanka. Now, in order to address this, there actually has been multiple proposals that have come from an education and higher education perspective. Now, there have been multiple discussions to set up universities in Sri Lanka. There has also been discussions to set up a branch of IIT in Kandy as well. Now, when you see these things increasing, you would have an increasing number of qualified people who are in Sri Lanka. When this actually improves, then you would be able to see this sector improving quite significantly as well. And this is actually one area where you see the private sector working very hard as well. Even from a lot of the private sector companies, there are lots of facilities and functions they do in order to improve, in order to give skills training and also to bring people into the industry. If this continues, and definitely there is a lot of talk even with this budget about setting up different IT-based promotion agencies. If this actually does improve, you would see a significant benefit coming to the IT sector as well.
Thanks, Renal. Another question.
Just to add a little bit to that, Natashi. So yes, I think Renal covered most of it. So, so the IT industry, so this time we've heard a lot on digital economy. So actually government is much more focused to make the economy digitalized. So this has been one of these key topics in the this time's budget throughout. So which in turn, gives us this idea that the government is very much focused to develop the IT industry in the country. And also, we hear that there are talks with India as well to, revive certain agreements. DECTA is one of these agreements which has been there in discussions over the past years. So currently, the negotiations has recommenced is what we hear. So definitely, there's some way for IT because the government really wants to give some boost towards this industry. So there were many concessions also over the past years, which currently some of it is not there anymore for most of the industries, including IT. But going forward with all these universities and government's plans to have more agreements and more arrangements with different other countries as well with regard to IT, and also to make things more digitalized. So they are planning on remis, They're planning to implement that as soon as possible, linking the tax identification number is there. So everything is all connected, so that we are seeing a lot of support that the government is planning to get from the IT industry. So what we see is a clear focus is there to develop the industry. So I think going forward, it should be very much good for the industry as well.
Thanks, Shadini. So there's another question on how will the dollar rate be in the future with the budget?
So let me take that question as well, Natashi. So now with the budget, we now if you keep the budget aside for a little while, so dollar we've seen our reserve buffer has been strengthening throughout. So we were at a point of time during last year, our reserves were basically zero. We did not have any usable reserves. But now, as of now, we have managed to approach close to $3.5 billion worth of reserves in our government coffer. So this is very, very encouraging. And going forward, we are currently, looking at improving income from exports. We are looking at improving income from tourism. And on top of that, if we get hold of FDIs and other foreign direct investments to different other large ticket projects. It could be different segments, like it could be renewable energy, it could be construction, it could be healthcare, it could be to the port city, anything, and also to the financial sector from different multilaterals or different other funding agencies, the international funding agencies. Definitely what we can see is our currency is going to strengthen. So as of now, the LKR value, we saw huge depreciation over the past months, but now the currency has, been relatively stable, and it's hovering around 325, 328 levels on average. So going forward, if we see more channels, forex channels coming towards Sri Lanka, because there are several things in line as well, $150 from $150 million from the World Bank, and we recently saw DFC making an announcement that they are going to do an infusion of close to $500 million worth of funds for the West Container Terminal development. And for Port City, we hear a lot of investors are interested in funding. So all these aspects would definitely strengthen the rupee going forward, because we are attracting more dollars. And in the event that we earn more earnings from tourism, from remittances, definitely our currency is going to strengthen in the coming years as well. But one thing we need to look out for, we know that the relaxation on certain imports are going to, the restrictions rather, on several imports are going to be relaxed in the coming months. This was, one of these agreements that we had to come up with IMF when we were approaching them, because trade is supposed to be a two-way street. We cannot really restrict one end and benefit from the other. So a gradual relaxation, we saw some items getting relaxed over the past months as well. So a gradual relaxation in large scale imports, like vehicles, to other imports which take a lot of forex from the government coffers, would definitely have some sort of an impact on the currency going forward. So there could be a small depreciation in the medium term, maybe a mid-single digit depreciation, but all in all, currency would remain relatively stable. And what we believe is it will not sort of, experience any sort of a steep depreciation as it experienced during the past couple of years. Yes, thank you, Natasha.
All right. Thanks, Shadini. So the next question is, how would you see Sri Lanka as an exporter of renewable energy to South India via the budget impetus?
Yeah, so I'll just take on that question, Natashi. So definitely a couple of things is when you're simplifying the entire licensing process. Now, speaking to a couple of people from the industry, This has not been finalized yet. But if you are going to simplify the process of giving the renewable energy licenses, getting into new PPAs, especially on a US dollar term, then that would be something extremely beneficial for the industry. Now, typically, the way that a power purchase agreement works is you would sign a contract for a period of 20 years, and that would include both a fixed and a variable cost component. So you would have a fixed cost component, which is standard, and on top of that, you would have a variable component based on the inflation situation of the country, and also based on the forex fluctuations. So this is something that typically gets factored in. So even if there is some significant one-off impact that would come during a year, by the next year you would see that adjustment coming in to the tariff rates. Now, having this also in US dollar terms gives people an additional cushion for these fluctuations that might happen. And at the moment, that is one of the key discussions that are taking place with the government and the sector in terms of providing tariffs also in US dollar terms. So if they are able to do this, then that would definitely provide an opportunity for Sri Lankans to go and invest in energy, even with the sole intention of export. And as I mentioned previously, especially when it comes to wind power, when you compare the generation statistics of South India and Sri Lanka has a much higher output. So it's much more beneficial for you to set up plants in Sri Lanka and export it then to India.
Thanks, Renal. So another question, USA interest rate may increase and how it will affect the capital market in Sri Lanka.
Yeah. So again, right now, this is another key thing to bear in mind. You are looking at there being multiple impacts from a global perspective. Now, especially the crisis that we see in the Middle East is also another thing to watch out for, because there would also be concerns with regard to oil. Now, oil from the region, if this conflict escalates, you would see issues coming from that aspect as well. But you would have to see how all these global markets adjust to these changes that are taking place. In terms of an interest rate increase in the US, now typically when you look at the way funds flow into frontier markets or emerging markets, you see the US interest rates being taken as a base by which to evaluate equity investments in the US. And when the interest rate increases there, then the return that you require from an equity investment also increases. Now, that is taking an equity investment within the US itself. The moment you go to a frontier market, the moment you go to an emerging market, what that would essentially mean is that you would want to see a higher return coming in for your investment. So that is one thing to watch out for when you're looking at overall fund flows. But what we need to understand is Sri Lanka is a little different to general frontier markets or general emerging markets. The reason is Sri Lanka went through a one-off crisis, and recovering from this crisis, any fund flows that come in would be fresh funds that are coming in. And that would be a recovery much stronger than what the general conditions of the sector are. So while the overall emerging market sector may take a bit of time or may fluctuate a little bit, Sri Lanka still has to come from this level of near zero back up to an average position compared to emerging and frontier markets. So because of that, when you're looking at Sri Lanka's example in particular, still foreign investments is something that we can expect in the market over coming years, especially if things do start to require to improve. And this is something we have already seen with foreign clients definitely showing a lot of interest in the market as well. So,
yeah. So thanks, Renal. We have another question.
Natashi, can I interrupt you there? Please, a small thing to add to what Renal mentioned. So basically, yes, US interest rates, a gradual increase in US interest rates is some sort of a concern for capital markets in Sri Lanka. But what we need to keep in mind is we do have quite a bit of fundamentally stable counters within our listed entities. Who has been reporting back-to-back good, encouraging performance. Their results has been, quite outstanding. They've navigated the storm ahead of the pack. So there is still potential for these counters to grow and provide a return maybe about 10-15% on a yearly or maybe on a quarterly basis. So based on the fundamentals and the stability of these counters, definitely we still have the potential to attract foreign investments towards these counters. So despite the US interest rates currently, having this upward momentum, um, we need to keep in mind the whole logic behind the interest rate revisions are basically done to tackle inflation. So inflation is currently cooling off in many regions and same as in US. So once the inflation sort of cools off, definitely the measures taken to sort of take this upward momentum of these interest rates would gradually be uh, you would be taking a U-turn. So definitely at that juncture, definitely the Sri Lankan capital markets would still be um, the outliers, or rather they will stand out and give a much better return in terms of when we compare with the interest rates and the returns generated by the fundamentally stable stocks listed within Colombo Stock Exchange. And even despite, we've seen that, Fed has taken moves to increase the rates, there could be a juncture where they would take their step back and sort of think of uh, cutting down rates as well, because they also need the economy to sort of rejuvenate and get back to normalcy. And inflation is also currently not um, fluctuating, rather it's not really going above the nose, so it's also in a controllable level for many countries as well as in US. So definitely that change would make the Sri Lankan capital market still attractive, uh, even this juncture is what we need to think of. So foreign investments is much likely to come towards Sri Lanka back again, despite we are seeing very limited activity as of now. So as we mentioned earlier, the critical point is a revision, an upward revision in Sri Lanka's sovereign rating. So once we get through successfully the whole external debt restructuring process, definitely we will see more funds being channeled to the Sri Lankan market. So it will so the capital markets would definitely be one beneficiary out of the lot. Yes, Natasha.
Thanks, Shadini. So we have another question on construction sector. So the construction sector exhibited a negative growth for the last 5 quarters. Would you expect from 2024 January onwards the construction sector to expand by 10% or more?
It's very difficult to quantify the growth, but what we need to keep in mind is we are ahead of this big barrier, as I've been reiterating. So we need to get through our external debt restructuring plan, and that is where we should consider that as a turning point for Sri Lanka. So once we are successfully through that, then definitely we would see more funds being channeled to Sri Lanka. It could be for infrastructure, it could be for different other industries. So definitely the stalled large scale projects would recommence. And yes, the allocations, as government, has been struggling over the past years, they would have a much more breathing space in terms to provide for infrastructure development. So definitely we will see a turnaround in the performance of the sector, but the number as well as when as to this to happen all depends on how soon Sri Lanka finalizes the external debt restructuring process.
Yeah, thanks, Shadini. Moving to the next question. In your opinion, what are the deliverables and what could not be achieved? It's been said that last year budget, 69 of the proposals were not achieved.
Yeah, shall I take that question? It's a, a tough question, but
Sure.
Yeah, so this continues to be one of the key concerns in any budget. Now, especially when you're looking at what might happen in the coming year, you also would have some high priority items. And when you're looking at it now, as Shadini mentioned as well, when you look at the tax identification number, for example, now that's an extremely good proposal, but they haven't given a deadline. So that is something that can be slightly concerning sometimes in these. But however, if they are able to implement some of these, that would be quite positive. And the one takeaway that we can look at is, if you look at the past year, there has been a whole load of extremely unpopular policies that have come into the picture. You've looked at cost reflective pricing for electricity, cost reflective pricing for fuel. You've looked at a significant increase in personal income taxes, in terms of pay taxes, corporate taxes, whatnot. And now you're also looking at VAT increases, expanding the base, all of these things coming in. So typically what we have seen is that the government so far, at least in the last year, has been able to implement some extremely unpopular policies. And hopefully this would continue going forward into 2024 as well.
Thanks, Renal. So, please explain about the rupees 3,000 billion allocation for debt restructuring and settlement of ISBs. Also, what is the purpose to increase the debt limit by 3,450 billion?
Yeah. So this is actually a bit of a tricky question, but let me take this in two stages. So first is along with the discussions regarding ISBs, firstly, there has also been a discussion with regard to converting it to LKR terms, at least for a few of the local holders of ISBs. In that kind of scenario, you would likely see it being converted to long-term bonds. And in order for that to be done, you would need to have an additional limit in order to issue new bonds for that entire period. That is one aspect of this. And if you look at also the interest cost component, now despite treasury bill rates coming down, despite actually the T-bills being restructured to T-bonds and the T-bonds being extended even further during the domestic debt restructuring, you actually see the interest cost for this year increasing from about 2.2 trillion to about 2.6 trillion. And this could be another factor to take into account as well. Another thing that we would see in this circumstance, which is not necessarily the most positive point, but is something we have to understand on a realistic perspective, is also the aspect of money printing. Now, with the bit of legislation coming in to prevent money printing going forward, there has been a time period of 18 months in order for this to come into full effect. So in order for there to be a slightly softer launch of this without a hard stop to money printing immediately on day one, there is an extended time period in order for them to phase it out. And during that time period, you can't go more than a maximum of 10% of what the budget, of what the borrowing requirement is for that year. So also by increasing this borrowing requirement or borrowing limit, you are also increasing the percentage that could be printed in the event that you have to. So again, this is not something we believe would happen unless we go into an extremely desperate situation. But I think this is also something that gives us a bit more breathing space as we transition out of this entire culture of money printing into a more normalized society that functions on equilibrium. And for that interim period, this is something that can give a bit of breathing space to the economy. But aside from that, the predominant reason for this is actually the restructuring of some of these ISBs and the potential conversion of these to long-term bonds for this time. So that would be, if at all, the more formal reason, and the more informal reason as to why you see these two aspects coming into the picture.
Thanks, Renal. There's another
Natasha,
question.
can I add something very small to that? I think Renal gave a very, very detailed explanation on that. So on the 3 trillion allocation for ISB settlement, so we will have to keep in mind that since Sri Lanka announced that they are temporarily going to refrain from settling external debt. So up to now, we have close to about $2.75 billion worth of ISBs to settle. So and in this budget, this is like a clear indication that government is going to, finalize on the external debt treatment plan. And yes, so close to about $3 billion worth of ISBs need to be settled. So definitely we need to have some sort of cash uh, in line for that to to allocate for settlements for the capital as well as the principal interest as well as the principal payments. So that is the main reason why we need that allocation very badly, because we need to get through this whole external debt restructuring plan. So we need to keep our capital buffers in line to provide for this repayment. So that's the main reason why actually we have this sort of an allocation uh, provided in this budget. Yes, so that's what I wanted to add. Natasha, we could move over to the next question.
Thanks, Shadini. So, what is your thought about the large brain drain happened during last couple of months and it's still continuing? Will this be a negative in long-term perspective?
So yes, let me quickly answer that since we are running out of time as well. Yes, definitely it's actually a very, very negative in terms of country's perspective, because we are losing out on a lot of, um, smart youth for, because the country has been struggling a lot during the past few quarters due to, all known facts. We've seen a lot of, apart from employment, there were a lot of, very qualified youth. We've seen they've been migrating for educational purposes and things like that. Apart, it's not only to the Middle East, but to other regions as well. So in the long run, definitely it's going to, hurt our economic growth. But in the event, Sri Lanka manages to tackle all these things well in the coming months, definitely we can reverse this sentiment. We can attract them back to the country, and definitely, things might look much more brighter for Sri Lanka.
Thanks for that explanation, Shadini. So, I think we don't have any more questions, and since we took like more than 1 hour for today's session, we can conclude for the day. So, yeah, thanks everyone for joining in. I hope you gained some knowledge about the budget and also got your questions clarified. And thank you, Shadini and Renal, for giving some in detailed explanations. So, yeah, once again, thank you everyone and have a nice day.